Thanks everybody for being here today on this Saturday. So, well, let us get started. I'm going to dive into my 13-step formula for finding, systematic kind of trade selection process that I use. So, glad you're here. So, hopefully, this is going to help you kick off 2026 with some good, better trading ideas and how to go about, selecting trades and go from there. So, like to make this as interactive as we can. So, make sure to ask questions as we go and. Sometimes the GoToWebinar scrolls down, so I might miss the question, so I put it back in there. But, let's make it as interactive as we can. So this, workshop today is just going to go through how I select trades, that I send out primarily to my alert service and in my trading room. So we're going to go through all the different steps that I go through and show you some different examples and scanners and things that I use. And then go from there. So, but first off, a little bit of background on myself. I started my trading journey back in the 80s with a company called Coastal Corporation. And at that time, they actually had a training program where they would, take you in and train you to trade crude oil and oil products and things like that. So it was a fantastic program that I was put into. And they had a big refinery down in Corpus, Texas. So they sent me down there for about 3 months. And it was a really good foundational kind of a start, to see how the oil comes into the refinery, the processing units. We go through the distillation towers, make gasoline, fuel oil. So just gave you a good grasp on everything. So it's been about 3 months there, kind of learning that process as we go, and then ended up in the shipping department, chartering tankers. That was fantastic. And then finally got on to the trading desk for crude oil cargo trading. So that was, my start in trading. They sent me out to Singapore for a couple of years, traded Asian products and crude. And then in the mid 80s, got a job at a company called Transworld Oil. At the time that they were the largest oil trading company in the world. So it was Transworld, Fibro, and Mark Rich. And so that was where things really got exciting. So we were, pretty much in all the different, markets, futures markets, foreign exchange, big in the energy side. And that's actually where I started trading options back, about 1986, 87. So that kind of started my path on the trading journey for options. And I'm going to go through, my selection process that I currently use today. So let's get started. And again, thank you so much for being here. So the following presentation or workshop is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, in trading, the reality is that as an individual trader, we really have to do a lot all alone, So as you know, one of the most time-consuming and expensive tasks, though, is finding high probability trade setups. So over the years, I gradually combined what I learned from when I had my employer pay for everything, and I developed my own research kind of process I use, resources to use, developed my own proprietary technical trading indicators to use, and then also developed a strategic option guide for selecting, which option strategies to use when and for the best results. So this evolved into a process that finds the best trades and the best option strategies to use based on the current market environment that we're trading. Now, what I recognize based on my 4-decade trading journey is that my most profitable trades all had some same underlying characteristics. So what I did, and this is a really good, really good process for everybody here to do, go back and look at all your, winning trades and even your losing trades. And what you want to do is you want to break them down and identify and define the winning trade characteristics, what made them a winning trade, and then develop that into a repeatable trading selection process to identify and find these kind of trades based on the same process over and over and over. So that's basically what I've done. I've broke down all the winning trades, looked at their common characteristics of what did make them win, and then put together a 13-step process for helping to select the trades that I like to set up for trades in our trading room, or for alert trades that I send out. So that's what we're going to be covering here this morning. So first off, though, let's do a nice market review. We just kicked off 2026, and so let's take a good review here and see where we currently are. Now, we got that snapback, market snapback yesterday, but risk still remains into the market. So we had a really great sharp Friday pullback to the upside as crypto's finally stabilized, with the S&P up about 1.97%, reclaiming back that support level of 6,900. Now, despite the bounce, though, the short-term structure still shows a negative kind of skew to it. So it's got high capped, kind of near that 7,000 mark, right here where my pointer is, 7,000 on the upside on the S&P, and then the lower lows since the start of the year. So we've been getting lower lows. We've got a kind of capped upside at 7,000. So we're kind of in that sideways churning kind of, position of the market. Now, the index, though, also remains close to all-time highs, but the downside risk towards 6730, which is the mid-December low, is still there persisting. So especially into late February when seasonality gets weaker. So this is one thing we want to be aware of, the seasonal shift that we're going to get towards the mid part of February. Now, market character, the characters appear to have shifted too, with resistance now carrying more weight than the support side of the market. So we've got that upside resistance right there at 77,000, and it's pretty substantial there right now. The other thing too is so here you can see the upside 7,000 right there, kind of that capping the upside. And then we've got the mid-December kind of lows right here, 6730. So you can see we're into this kind of sideways band right here, from that 6730 up here to 7,000, just kind of right in the middle of there, just kind of churning. So just kind of holding steady, but holding up so far, with the earnings currently, coming out. So a lot of uncertainty though with the earnings and the AI situation. Now the next thing though is market rotation. So, not risk abandonment. So the market behavior still aligns with the rotation from the growth, the high beta kind of growth stocks, the hyperscalers, into more value-oriented type stocks, but not a wholesale risk aversion. So it's not totally risk off. It was looking kind of hairy there earlier, in the week last week, but then things kind of settled back, and we got that really nice pop back up. And really the rotation was really more so out of the NASDAQ 100, with the Dow Jones really holding steady, and the Russell and everything pretty much holding up quite well. Now we still have key bullish internals remain intact. So when you look at the bank sector, so the KBE or the KRE, they're still a rising sector, okay? And they're still holding former resistance as support. Now, also small caps have been outperforming. They continue to outperform, and that's contrary to the typical pre-correction behavior we've seen in the past years. Also, the NYSE new highs were made above the bullish threshold level, reaching a new 52-week high of its own, and the advanced decline line volumes continue to trend higher. So we're still seeing some, decent signals for this rotation to hold up. Now, these signals then argue against any kind of imminent broad market pullback, despite the growth sector stress that we saw early last week. Now, given technology's heavy index weighting, then the market is going to be more likely facing a kind of a grinding slog rather than a sharp collapse to the downside. So that's kind of a overview of what I was seeing as we went through the end of the week. So here's the KBE, which is a bank ETF index. And so you can see this is the daily medium term, really nice trend to the upside, still holding trend on that 21 exponential moving average, still really nice positive momentum right here, cycle 1 and 2, which I look at for momentum. So a really nice trend, still, moving to the upside. That's the banking sector. Really important to have that, in line with the markets, and that's holding up. And then we also have the regional banks doing the same. So we've got the KRE, and it's also still continuing to trend up with positive momentum, on the relative strength on the cycle 1 and 2, which measures momentum. So that's looking good. So that's a positive alignment there. Now, when we look at sector rotation, you can see what's happened here. This is over the last, Friday. We had a really big rotation back up. We had a big, huge sell-off, over the last week, and that information technology got hit really hard and had a pretty nice little snapback rally, on Friday. So it was up 4%. So you can see all the sectors came back up, and we're in the green. You can see that for the last 6 months, what's been, rotation has been the really big winner has been energy. All right, so energy is up 25% over the last 6 months. healthcare. So a little bit more, rotation into these areas away from, the information technology and communication services. The rotation's been in energy, healthcare, materials, in industrials and staples. And then for the last year, you can see the industrials has had the biggest move. So this is really taking advantage of the AI technology coming in, helping the industrials out. So you can see it's had a pretty decent move, up for the full year, 12 months, about 25% there. Energy, pretty good move. Information technology was holding up for the last part of the, for the year anyway. You can see that. So that's kind of a look at sector rotation where we currently are, for the last 1 day and then 6 months, back. Now, the next thing I like to always be in line with and try to see where is seasonality. So let's take a, look at seasonality currently. So we're currently right about here. These are seasonality continuations charts. This is the S&P 500, the June contract or June series. And you can see we're currently right about here. So we do have another little seasonal bump to the upside at this time of year. And then it tends to kind of get a seasonal top right around the mid part of February, so the 14th. So right about there. And then a potential for a pretty decent little, seasonal pullback. That goes into March, and then we have a nice seasonal rally back up in April. So we'll be watching this with all the current situation, with the markets, technology, earnings, the uncertainty we had last week. This is an important thing to follow, the seasonality when it starts to top out, and that will be end of next week. So we'll see if we get some more continuation from a seasonal standpoint to the upside this week, and then see what happens towards the end of next week. So that's the S&P, and then when we look at the NASDAQ 100, it's pretty much the same. So we're currently right about here. We have that seasonal little bump, nice little seasonal trend up into that mid part of February, and then a potential for a pullback into March, and then a continuation back up after that. So seasonality is always something that you want to try to align with if you can. And right now it is, the wind to the back of the market currently. So that's the NASDAQ and the S&P. And then here's crude oil, which has a really strong seasonal trend this time of year. You can see we're currently right here, and we have a nice seasonal push up into the early part of March. A lot of this is attributed to refining, starting to increase refining runs for gasoline build, and also producing fuel oil and distillates for the wintertime. So a lot of refinery runs, a lot of demand there currently. So you can see that seasonal factor pushing, in favor of energy to the upside for right now. Now let's take a look here. The next is, what I call a top-down market review. So first off, I like to, what I call the macro view first, and that's using the monthly time frame. And I'll go ahead and pull that up. So what you're looking for here is I look at momentum, and then I look at, what is the trend? Are we up, down, or sideways? So the big macro picture here, using the monthly time frame, is that we are in a nice steady uptrend with good positive momentum. You can see our momentum indicators here, cycle 1 right here, cycle 1 and 2 measure strength of price strength based on momentum, and they're both still positive. So that's a very positive factor for that. You can see it's been trending here, really steady trend. This is a monthly on the 8 exponential moving average. Just really nice, grind to the upside, starting to kind of go sideways a little bit right now. You can kind of see that situation, but still the trend is intact on the macro time frame to the upside. So that's a look there. And then let's break it down. The next layer down is the weekly, which is referred to as long term. So we look at the weekly long term SPX. You can see here we've got neutral momentum. Cycle 1, which is fast momentum, is down. 2 is positive. So the momentum to the market is right now neutral, and the trend is still, though, to the upside. So really holding trend here. I like to follow the 21 exponential moving average kind of for trend, and that's where it is. It's still above that 21 exponential with the next key moving average down here, the 50 simple. All right, so the trend is still up, but momentum is neutral. And so that what happens a lot of times is we start getting some exhaustion on the buy side. That's what can cause, the markets to stall out and possibly reverse. So that's what we're going to, be monitoring and making sure that we're aware when that does come, and we can pretty much see that coming with our momentum type indicators that I'm, pointing out here. Now, the next one we drop down to the medium term or daily time frame, and you can see this one has really kind of been shaken last week. We had a break below the 50 simple moving average right there, and we've got sideways price action. You can see really sideways on the price, with that 7,000 and then that 67.30 down here. So really kind of tight consolidation pattern here. And that's also what we call a volatility squeeze, which you can see the dots here represent the squeeze when it starts. Got that coded into my indicators. But we got back over that 50 simple on Friday, so that's a decent positive close. We'll see where things fall through, into next week. So next week we've got one thing coming up. We'll have the non-farm payroll that will be on Wednesday. So that a lot of times that can be a catalyst a bit. So we'll see where that comes out and how that affects the market. But that's kind of a summary of the market overview from the macro down. And just in summary there, the macro big trend is still intact to the upside. The longer term trend is starting to stall, lose momentum, but still sideways. And then the daily time frame is still intact, but also lost momentum. And now momentum is neutral on that as well. Now, the next thing is selecting the best swing trade setups. And what I like to do is break this down into certain steps. Okay, so what I like to look for is first, what is the market cycle trend? So, we're looking at kind of referring to swing trade trends, which are, based on the daily time frame. So that's where, on a daily basis, the markets are making these cycle swings either up or down. And we're trying to time entries either, for swing back up or swing out on the daily. So the current market cycle trend for the daily time frame is sideways, as I, showed you just a few minutes ago. All right, so it's just kind of churning sideways, consolidating sideways, actually in a volatility squeeze, which at some point will lead either to a break out of that squeeze to the upside or to the downside. Now, the market condition, there's always going to be uncertainty in the market, and right now it's kind of more highly elevated. The VIX kind of had a bigger spike last week. Still that ongoing concern about the CapEx spend on AI and the return on that spend. So we've got uncertainty kind of a little bit more high elevated level. So that's something to be aware of for the markets and how you trade. Now, the next thing is the market or stock relative strength or momentum. So right now, based on the different time frames, when we look at the daily medium-term time frame, the market momentum is neutral, and also on the weekly long term. So neutral meaning, it's not biased to the upside or downside. It's just kind of neutral in between. Now, the next thing that I like to do, and I'll go through these patterns, is I look for selective chart patterns. And there are 5 different kind of, what I call my high winning probability chart patterns that I look for. And these will also then help me to define a good trade setup based on the pattern. So we'll take a look at, and I'll show you the ones that I like to follow there. And then the next step, 5, is your time horizon. What is your duration for the trade that you're, putting on? So if you're looking for, a very long-term trade, out 1 year, 2 years of trading trade there, or are you just looking for, swing trades, which could be 1 day to 2 or 2 or 3 weeks? So you want to define and have, out there, what is your time horizon you're looking for the trade to, to perform within. All right, so these are all key points that you want to be aware of. Now, before we get much further in, I'm going to be giving you a really great discount on my alert service. So this is my trading alert service. So if you'd like to take advantage of this, I'm going to give it 20% off of this alert service, which actually, if you break it down, if you break down this number, it comes out to about a little over $3 a day. So this is going to be, I do this maybe once or twice a year. So if you'd like to do this, put in alert 20, powercycletrading.com/special alert 20. You'll get 20% off, and you will get this for 6 months. You can start and stop when you want. And let me just put the link in, and then we can, I'll go into more detailed questions here at the end of the workshop. But here's just to get you started in case you have to take off early. Don't want you to miss this opportunity here. So click on that. You should be able to click on that or copy it and paste it. And then once you click it, it'll pull up a payment link, and then put in small cap, put in here alert 20. Okay, so put that in alert 20. And what you're going to get, we'll go through this, you're going to get for the next 6 months. And you can start the alert service when you want, stop it when you want in case you go out on vacation. So you get 6 months of my alerts, and then also 6 months for my trading club. The normal price is $690, but for today, use that alert code alert 20. You'll get 20% off, and that'll be $552. So that's going to be a really great. That's below, what is that? Less than $100. It's about $92, $93 a month, or I think it was about $3.05 a day if you looked at it on advertised, kind of like that. So with this, you're going to get access to all 5 of my trade alerts, okay, for the next 6 months. So typically it will be 8 to 12 stocks or ETFs that I send out per month. And the alerts that I send out and cover will be very, very selective trade setups for counter diagonals. We do a lot of those. Selective butterfly and long condors. Selective butterfly, kind of what we call pinning trades using butterflies and calendars. And then selective breakout trades, which are typically debit spreads or credit spreads. And then very selective earning option trade setups that I send out. So 5 different types of alerts that I'll send out, and you'll get those for the next 6 months, plus the trading club for the next 6 months, which gives you access to the trading room and a lot of other really great benefits. So let me pull that up real quick, and you can see what that looks like. We'll walk through that, and then we'll move on to the next part of the workshop. So put that in, powercycletrading.com/special. Okay, let me get this blown up. All right. Alert 20, PowerCycle Trading /special. Alert 20, make sure that's small cap. And let's go down here, I'll show you. You can also get my indicators if you want to add those to the cart when you're checking out. So these are the indicators that I use for all my trade setups that I send out. So come down here and you'll see everything you'll pretty much get. So here's just a real quick summary review of the alert service, unaudited results. So you can see going back here, I started sending out my first alert back in May of 2018, and through Friday, I've had 980 trades closed out, 697 winners, 74 break even, and 209 loser. Win break even rate 79%. These are unaudited, so really, really high winning probability trade setups there. So that's going through since the inception or start in 2018. And then here's the yearly summary for the different 4 trade alerts through 2025 for the year 2025. We ended up with a total of 151 trades closed out, 101 winners, 19 break even, 31 losers, a winning trade rate, break even win trade break rate at 79%. So a high winning percentage there. And again, unaudited, just to point that out. And then so far for the year, starting, for this year and through Friday, we've had 15 trades closed out so far this year, and 10 winners, 2 break even, 3 losers, 80% win rate there, win break even right there. So that's kind of what you can look at the kind of results that we've been getting. Really, really good results there. And then with the service, you'll get alerts sent out, 5 different type alerts that I send out there. So it'll be dependent on what the market's given us, and that's what then we'll send out based on what the market, I'm seeing what stocks and what ETFs, et cetera. So it could be, like I said, a counter diagonals, could be butterfly trade alert or long condor, breakout reversal trade setups, butterfly pinning trade setups, and then selective earning option type trades. So those are the kind of the 5 different kind of category of trades that I send out. And then when I send this out, I'll give you a trade setup, exactly how to do it. I constantly monitor the trades, giving you adjustments and updates on the trades, and just keeping you aware of what's going on from all through the day. If there's anything coming up, any adjustments that need to be made. So this is what you'll get. You'll get all 5 of my alert setups then again for the next 6 months, and also then access to my trading club for the next 6 months, which gives you access to my virtual trading room open each during the week from Wednesday through Friday, 9:30 to 10:30 Eastern, or Eastern, and then we do a live recording, a live Q&A every Tuesday. All right, so you have access to that for the next 6 months. Daily aftermarket video updates I do every day after the close. Trading videos are archived. Traders Educational Vault, some really great trading education material in there for all members. And anything and everything on my website, 50% off. All right, so right now the price $690, but with that alert 20, it's going to be $552 today. And let's go through here, and I'll just show you. Just click on that, and then make sure you put in alert 20, and you'll get the big discount. And there is a 2-pay if you'd prefer, a 2-pay as well. So alert 20, click on that, and you'll see that knocks down to $552. So that's a super expressive of what a great deal that is for everybody here. And then it comes out to about $92 a month, or if you look at it on a daily basis, you're talking about a little over $3. So put that in, and then if you do want my 2-pay, you can do that here. And if you want to have my directional trading indicators, 5 study set alerts or indicators I use, you can add that to your cart there. And I've got these indicators available for Thinkorswim, TradeStation, NinjaTrader, eSignal, and TradingView. All right, so just kind of wanted to highlight that real quick, and then we'll move on. We'll come back to this. Any questions you have on that towards the end or at any time, just please let me know. Question on what does the long-term denote in the chart? Yeah, we'll back up and I'll show you that. All right, so that's a look there. Now the next thing is step 1 through 5. This is where we look to identify the market cycle, the market condition, to validate a stock's relative strength based on your time horizon you're looking to trade. So I just had a question here. What does a long-term denote in the chart? Let me pull that up and I'll show you real quick. So when we look at long-term, it is based on a weekly time frame. So here's the S&P 500 SPX, and put it down to the weekly time frame. I refer to this as a long-term time frame. All right, so the long-term trend right now is, when we look at momentum, the momentum's neutral. Cycle 1, which is my really fast momentum measurement, is negative, below 0, and cycle 2 is above. So kind of each cancels it out, so it's negative. But the trend is really still steady to the upside. You can see based on that 21 exponential moving average. So still tracking trend really nicely on the weekly, longer term time frame. All right, so hopefully that clarifies that. Now the next thing is to identify market cycle trends. Okay, now currently, based on what I just showed you, the medium term trend is kind of trending sideways. Okay, so we're kind of stuck in that range between the upside of 7,000 on the upside, and then on the downside, that's 6,300. So I just kind of put this in here real quick. You can see this 7,000 up here. That's kind of capping the upside, and then we've got this mid-December lows down here at 6730. So you can see we're just really in a sideways pattern here on the medium daily time frame, which is kind of the swing trade time frames that we follow. Now, to do this market cycle work and to identify cycles, what I do is I use 4 moving averages to help to identify and track trend and to define areas of support and resistance. So the key moving averages that I will always be using on a daily, weekly or monthly chart, I'll always have my 8 exponential moving average. So that's a fast moving average measurement. I'll have my 21 exponential. This is what I really use for tracking trend. So that's the primary trend. And then the 50 simple is super important, and then the 200 period. So currently, we're still, on trend on the upside, still right above the 21. So holding that. So as long as the 21 period moving average exponential holds, the trend is intact the way I measure and assess the market. So we look here, you can see This is the daily time frame. We broke below that 21, but we recovered back above it, and had that big recovery back above the 50 simple and the 21. So we're just pretty much sideways. We're not trending up. We're not trending down right now. But then just to kind of go back over the weekly long term, you can see the trend is still holding trend based on the 21 exponential moving average. So that's still looking good there, but capped on the upside with 7,000 on the top side and about 6730. So that'd be 700 with the SPY and about 673 on the SPY on the downside. All right, so these are the key moving averages that I'm going to always follow. Now, the next thing is I look to kind of quantify what are the market conditions that we're trading in. So again, there's always going to be some degree of uncertainty in the markets. Never the perfect market, right? Now, right now we're having a little bit higher uncertainty due to we're in the midst of the earnings, right? We've had a slew of huge earnings, which have overall been pretty decent, but what the market's been really focused on with the high tech, the higher beta stocks is the guidance, right? So a lot of these guys have had really stellar earnings, but maybe the guidance is a little bit less than what the market was looking for. And the other big thing was the CapEx spends have been increasing, which the market's been jittery about. So that's given us a high degree of uncertainty off of that in those AI extremes that kind of take that into consideration. So right now, high uncertainty, and that's what you need to be aware of for trading. We saw that volatility spike a little bit last week due to that uncertainty. Now the next thing is momentum. So when we're trading any type of market environment, it's all about price direction, timing, and then managing the risk of your trade. And the best trading tool then for signaling price direction and market timing that I've found is based on momentum flows. So momentum indicators, what they do is they will measure price strength or weakness. And when you're measuring these across multiple time frames, this really creates a dynamic trend following indicator that you can use to help you to identify new price trends earlier, before they, everybody else, the herd sees them. So you can see these things starting to set up based on momentum shifts. And then what it does, it helps you to validate a trend strength or weakness. So if you've got multiple time frames with positive, say, momentum on the upside, it's going to give you a stronger validation to that trend strength, to the upside, versus if it has maybe, one momentum time frame up and the others are kind of negative. So you can really use this to help validate strength. And then once you validate your strength, that's going to also then build your confidence and then help you to keep you in those trades longer to maximize your profits. All right, so these are really important. Momentum is, I always say, follow momentum, and it's one of the key indicators that I like to use for market direction. Now, the next part of my process is the high winning probability trade setups, and these are based on 5 different chart patterns that I've put together over the years and define what they are, and I look for trade setups. So kind of to break down these patterns, first off, there's the number 1 pattern, which could also be in these other 4 patterns, is what we call the volatility squeeze or volatility compression squeeze. So this is where you get that price consolidation sideways, where the market's going sideways, not going anywhere. Now, at some point in time, though, it's going to eventually break out to the upside or break to the downside. And that's what we're looking for there, the volatility squeeze. Now, this pattern, the volatility squeeze, then could show up at a cycle high reversal. And so this pattern is, when you've had the market trending to the upside and you've got, really strong trend to the upside, it starts to stall out, turn over. This is what I revert to as a cycle high reversal. Okay. Now that's another pattern. We'll go through some examples of what that looks like. The next one is what I call the cycle low reversal. So this is where the market has had a big, huge sell-off, starts to form that bottom, and then turns to the upside, cycle low reversal. And so these are, this would be price above all the key moving averages and fails. This would be price below all the key moving averages and starts turning up. Now the other 2 are what we call retracement reversals. And so these 2, the cycle low retracement reversal, is when you have a market which has been coming down, let's say it went up and then it's coming back, it's taking a move back to a key moving average. So it could be that 50 simple moving average and it bounces off that. So that's a cycle low retracement reversal. Or it could be the other way around, where you have a cycle high retracement reversal, where you've had a hard downtrend, the market gets the snapback rally, kind of like we did on Friday, and it goes up to key moving averages and then starts to fade or reverse there. So that's these are key crucial patterns to be aware of. So if I look here, just a quick example, I'll put this up on a daily time frame, and this has, let me get my indicators in here. So I'm going to put this on QQQ to show you kind of what I'm referring to with a cycle reversal. Okay, so QQQ, we had that nice snapback on Friday. All right, but the thing is, there's still risk. Okay, so what's going to happen is what we want to do this next week is we want to see, you can see here it held, that's the 150 period moving average on the NASDAQ QQQ. All right, so it held there. Now, the next key, you've got this cluster moving averages right here. So that green one is the 50 simple, and then right, with that kind of sandwiched in between it is the 21 exponential. So this market needs to get back above that area to, be, on its path for an uptrend. And you can see it's been sideways, but that's a key area that we're going to see what happens here Monday or Tuesday. If it can get back above that, if it cannot, this is the area that I'll be looking to short. Okay, so you see that? That's your 50 simple moving average, and that's the 21 exponential, and that dashed red line is the prior week's low. So be watching for this area Monday, Tuesday, right there. So that's coming in right about caught 618, 620. So what I'll be looking for Monday or Tuesday is if this comes up here and stalls, then I'll be looking to probably set up a short trade for a retracement. That's what we call a retracement failure. Okay. So put that on your game plan if you're wanting to follow along on that. So I'll be looking at potential short setup on that Monday, Tuesday, if we get that retracement up and a failure. That'd be on a QQQ retrace failure trade. Okay, and that is a really key. And then if you look here, SPY, I believe we're in a volatility squeeze on that, which I'll point out. Yeah, see the dots? We're just really churning sideways. Now, we're neutral momentum. Cycle 1 is negative, 2 is positive. So this is not giving us any, identification of an upside break to the upside or downside. It's just neutral, so it's a no trade. So right now you'd be doing zero nada on the SPY, no trade on that. Okay, so let's go through. I'll show you a couple more examples here. So here's a really nice, good setup to show you how volatility squeeze breakout looks like. But first off, let's go back over what it is. So the squeeze pattern is identified as a period again of price consolidation where price is kind of coiling in a very tight pattern and then has an explosive momentum breakout either up or down. So it's coiling sideways, right? And then it's not going to keep coiling forever. Eventually it's going to break up or down out of that pattern, that formation. Now, when a security then has multiple time frames, more than one time frame with a squeeze, then the volatility squeeze breakouts can be even more powerful and greater follow through, kind of like I referred to, like a chain reaction explosion, like lightning in a bottle. If you can just capture it and bottle it up, So what this really basically means is that, okay, let's say we have a daily time frame that's in a squeeze, and then we also have maybe an hourly and a 4-hour in a squeeze. So the more time frames in a squeeze, the more potential power once it breaks out. Now this chain then reaction then is set off usually by a lower time frame. I mean, it could start with a 5-minute, in a squeeze, which triggers a 10, which triggers a 30, etc. And then this can, trigger a really big reversal either up or a big reversal down. So it's a fantastic setup for your swing trades, day trades, and this is what really gives you the big, what I call my timing edge. And one thing to remember is time equals risk. So the quicker we can be in and out of a trade, then the less risk we have on that trade. And these trades kind of provide you that. They can be very, very fast moving trade setups where you're in and out pretty fast. So here's a really good example with Netflix, which had a bunch of different consolidation phases. So you can see this is the daily chart time frame here. And just down here, you can see the dots represent the squeeze, what I've got coded into my indicators. So you can see it's just churning there, right? And then momentum is what gives us potential direction for the breakout direction of that squeeze. So in this situation, momentum cycle 1 and 2 is positive. So the probability is for this to break to the upside, which it did. Then it comes back down here, loses momentum. See that? We're playing the cycles, daily cycle, the swing cycles, comes back down, goes into another volatility squeeze here. See the dots? Really tight squeeze pattern. Cycle 1 and 2 go positive, break out again. So we have another break to the upside in this squeeze pattern. We got a beautiful trend up here, just seeing it tracking that 8 exponential. Look at track, perfect move up, cycle reversal, starting to move over. And now we've got momentum coming off, so the market starts going sideways. We re-enter another consolidation phase, and again, cycle 1, 2 positive, break to the upside. So that's a really good layout of what a squeeze looks like, what you can look for there. And these are what I like to then apply to these types of trades, are either typically debit spreads. Sometimes we'll adjust that into the long condor or calendar diagonals. So these are the type of option strategies that I will use with this kind of spread squeeze kind of pattern setup. Now the next one is take a look at a cycle low reversal. This is where you come down and you've broken below all the key moving averages. Okay, so you can see this was on SPY, just a huge move down. These are my extreme range bands, and that purple line is the 8 exponential. So you can see it broke below the 21 exponential, which is the yellow dash, and then it just trended hard down with the upside capped at that 8 exponential. Look at that trending all the way down. Now, eventually, markets won't keep going down forever. They'll eventually bottom out. So here's where we can identify the bottom. And this is using my indicators. And here's my cycle reversal indicator. So these are the tools that I'm using, to find these trade setups that I send out in our trade room or at our alert service. So then you can see we had a cycle reversal. That's kind of the step 1 I look for. And then 2, we have cycle 1, fast momentum going positive. And we have confirmation of momentum cycle 2 going positive with that upside momentum cross indicator there, and then up she goes. So cycle low reversal there. So that's what that looks like. And that's the kind of pattern. I love that pattern a lot when we identify that. And here's your cycle low retracement. This is where you get a move to the downside, but it goes into a key moving average and bounces or retraces off the key moving average. So this was an example for gold futures. Here was on the weekly. You can see it came down, broke back above. That's the 200-week moving average. Started consolidating. See the squeeze going on there, and then finally broke to the upside out of that squeeze. Here it was in a daily squeeze right on top of the 200-day. All right, so that's a cycle low retracement off that key moving average there, and a break back to the upside. So these are the type trade setups I look for, to do that with this pattern, either debit spreads, butterflies, long condors, and calendar diagonals. So those are the typical setups that we will, that I'll look to, put on and apply to that kind of pattern. Now here's a cycle high reversal. This is where the market price is way above all key moving averages, and then it finally stalls out and exhausts to the upside. So here you can see this was QQQ, and it had been trending up, and it starts to stall out. We get a cycle reversal here. Okay, then we get momentum cycle 1 and 2 going negative. All right, so we're getting buying exhaustion. The market turns sideways, breaks that 21, and then we get a pullback right there. See that? So that's a daily cycle high reversal, and that's what I look for there. Here's another volatility squeeze, beautiful squeeze here. And look, momentum starting to shift here, and there's a breakout on that. So those are, patterns that I'm always looking to identify. And then here's the next one is your cycle high retracement reversal. This is where we had a big, huge move up into a key moving average. This was an example on XLK technology sector, and it moved up into the 200-day simple moving average right here. Look at that huge moving average resistance. Finally stalled out there, traded all the way back down. All right, so those are the key moving average or key patterns that I look for there. Yeah, hold on, Barbara. Here's the link again. Use this powercycletrading.com/special, and then make sure to put in alert 20 small cap, and you'll get the my alerts and trading club membership for the next 6 months. And you can stop and start when you want, if you need to take off on a vacation or, business or whatever. All right, so that's kind of a look there. Now, the next thing is this is a big part of it. This is, the trade scanning process. So, you've got to spot the trades, the breakout reversals before the herd, right? So I use 2 different types of scans primarily to find the trades that I send out. And we'll go through, those scans, and I'll show you what's kind of currently setting up. But first, here's just kind of a look at my kind of what I refer to as my custom watch list. All the different stocks, ETFs, futures that I follow, I put them into this list. I click on squeeze right here. That's daily squeeze, and it populates everything that's in a daily volatility compression squeeze pattern. So that's, again, that pattern that I showed you where you've got that consolidation sideways pattern. All right, so you can see there are a lot that have populated here. We've got, IBM, Lilly, Charles Schwab, the Diamond. We'll go through a few of these here, and I'll point out some of the ones that look pretty good. So we've got quite a few here. Now, when I look at this, I see here it says on Lilly, it says 20, right? So what that means is that Lilly's been in a squeeze for 20 bars or 20 days. And the momentum is basically now green is up based on cycle 1. And you look at IBM behind it, it's been in a squeeze for 19 days, momentum's negative. So let me pull that up and I'll show you, how this works in these indicators, how they kind of spell this out for me. So here's Lilly. I want to take a look at Lilly, IBM, and Schwab. All right, so let me pull up Lilly. All right, see the volatility squeeze dots? This thing has been in a squeeze here for 20 days, 20 bars, just really turning sideways over these moving averages. So we've got momentum, cycle 1 is positive, 2 is negative. So momentum is neutral, but this has potential for a big breakout, either up or down. My guess would be probably going to break towards the upside. We've got good moving average support below it. If you look down below, this is the other thing I look at. So we've got the 100-period moving average, 150, and the 200. So really good, strong moving average support on Lilly, and momentum is neutral. So just kind of watching this. That's Lilly, and here's another couple to show you. Here's IBM. And IBM's been in a squeeze for 19 bars, 19 days. Also sitting on top of key moving average support, the 150 to 200 day. So this is what I'll be really following closely, and putting this one on my watch list. But right in the middle of the range, not ready to break to the upside or downside yet. What I look for is a break of these prior highs or lows for the price trigger. So that's a look there at IBM. And here's one that looks pretty good, Schwab. This one looks pretty good here. Let me pull this one up for everybody. Hold on. SCHW. See, this looks really pretty good. See, very, very tight squeeze. See this? And the other thing I like about Schwab is a lower price stock is that, $100 strike price stock, but you can see momentum's neutral. Cycle 1 is negative, 2 is positive, but it's at a really tight squeeze. And so this is what I want to be watching for a potential break. Again, it could break up or down, but I'm kind of thinking right now more potential to break to the upside. Now, the next thing I do when I'm looking at my time frames, I follow closely the daily, which is swing trade time frame, but then to align with that, I use the 4-hour, which is just a little shorter than a daily. But you can see here on Schwab, we've got positive momentum. So Schwab looks pretty decent for possible upside move. We'll be watching this closely. And going from there. So those are a few here that I wanted to point out. And oh, the other one that looks actually really good is the Dow Jones, the diamond. So this is what I want to start watching next week. Let's just, the diamond ETF, DIA. So you can see here, we've got a really, really tight volatility squeeze here. See that? Starting to break it. This looks really good. All right, so the diamond is in a squeeze, and you see over here, it's in a squeeze for 7 days, 7 bars, okay? So this is where a lot of places where I find that my trade setups will be from a volatility scan like that. And the other one that I use is a scan that I put together called what I call my daily momentum upside reversal scan. So this is looking for reversal trades based on a certain scan that I parameters that I put in the scanner that I use. And you can see what's populated. This I run every day after the close. So you can see a few things that have populated here, that look kind of interesting. We've got ARM, ARM, I'll show you that. CAVA, CAVA, that looks pretty good. Now you can see here, it also gives me, my scan gives me the volume so I can see if it's liquid enough. So these are two, we'll take a look at ARM, CAVA. Those are a couple interesting ones. Then we've got, what else we have down here? Those were the main ones that I was seeing. Let me see if there's anything else that stands out. NTAP is kind of interesting. And let me show you those real quick here just to kind of refer to those. So I'm going to show you ARM, ARM, CAVA, and NTAP. Let's just take a look at those three. So here's ARM. Now see with ARM, nice positive momentum cycle 1 and 2 on the 4-hour. We've got momentum flipped here on the daily. So this looks pretty decent, but you're going to have big, huge upside resistance right here. This cluster moving average resistance up here. This is coming in at about 136, 135, but this looks like it has kind of a free movement path up here, probably to 137. So this actually looks good for kind of a short-term swing trade. So I like the looks of this. I'm going to put, highlight this one. We're going to be watching this one closely on Monday. And then what the other thing I'll do is I'll map what I call price target mapping. I'll map this out with my Fibonacci levels. But you can see here, this is the prior swing high right there, 123. It stopped right there. Look at that. So it'll probably pull back here Monday into this dash green is the prior week's high. Okay, this is part of the indicator package if you want to pick up my indicators. And here's your upside momentum cross, that arrow there. Okay, so looking for a move up here from, probably pull back to 120, good upside potentially to 137, 140. So that's ARM. That's one to be watching. And here another one that kind of looked pretty interesting was CAVA, CAVA. And you can see CAVA, big break to the upside, 8% up. So it broke here. See that orange arrow? That's the momentum upside cross indicator that I use. So a lot of the trades that I send out are based on this momentum upside reversal. And you can see cycle 1 and 2 are positive, came into that 200-day, probably going to stall out there for a little bit, but may give us the opportunity, maybe possibly get into CAVA. We'll watch that. And those were some of the main ones I was looking at. What else was there? That was NetApp. Let's check that one out real quick. So I'm very, very selective, and this is kind of the process that I go through finding these kind of trades. Now, NetApp, you can see here, we had that cycle reversal right there, the orange arrow. But again, nice cycle reversal, but it's going to have major resistance above it when you start getting up here to this kind of 107 area. So what I really like is if this was a breakout with no moving averages above it, then that's going to set up for a long-term trend. But this will probably be capped based on those moving averages, okay? So that's the problem right now that I see with NetApp and some of these others. All right, so that's a look there. And so this is kind of the process going through for, finding these trades. All right, now step 10 through 13 is the trade setup. And this is where then I apply and add the option strategy to use based on the market condition, okay? Based on that market condition of uncertainty, market condition as far as the cycle trend, and based on momentum. So this is what my lead open and close trade alert service, these are trades that I send out based on this process to show you what it looks like when you put it all together. So the goal of trading, in my opinion, is to have more winning trades than losing trades, since it's impossible to have all winning trades. With this reality in mind, then the performance to date of the trade setups that I'm going to show you through my service have been really very, very remarkable, as you're going to see. So what we use a service, a free app called Telegram to send the trades out. So this is an example of what you would get if you want to join my alert service. You would receive through Telegram, which is a free service, this text. So here's one this was on Friday. We had an Apple trade on. I said, profit update on Apple. And this is based on Apple, the adjusted long call condor. Apple, we started out with a call condor, call counter diagonal, and made a couple adjustments. And then I'll show you this in a minute. But then I sent this alert out Friday to all, alert members to, take a look at your profit. So if you had, this adjusted trade, we're long the 13 Feb 267.5 call, short the 13 Feb 280 call, and then short against that the 13 Feb 287.5 300. That's what we call call condor. Then this trade was currently up, I'm giving an update, $315 per spread. This was up 953% return on capital. All right, so this is what I'm constantly updating, giving alerts, giving adjustments, and that's kind of what you can expect to be seeing. Now, here's a summary of the alert services. I showed you this kind of briefly a few minutes ago, but here's just to kind of capitulate to this. Back when I started the first alert, sending this out based in May 2018, through yesterday's close, we've had 281 trades that we've closed out. 697 have been winners, 75 have been break even, 209 of those have been losers. So the win break even rate is 79%. Okay. So again, these are unaudited, but really high winning probability trade setups. Okay. Based on the break even and win rate loss. Okay. So really good looking trade setups there. Now here it is again, just to kind of go back over for full year 2025. We've had 151 trades through the year 2025 closed out. 101 were winners, 19 were break even, 31 were losers. So our win break even rate here for the full year of 2025 was 79% too, a really high winning rate. And these are again our unaudited results, just to kind of highlight and show you what this service will provide you, on the trades that are sent out. And then here, just so for a year to date for this year, since, starting the 1st of January, we've had 15 trades closed out, 10 of those winners, 2 break even, 3 losers, win break even rate here of 80%. All right, so maintaining that high win break even rate, which to me is kind of the success that you want is, based on your winning trades, right? And then I like to keep my risk as defined and low as I can. So let's go through. I'm going to show you, a number of different trade setups that I've sent out, that were sent out to the Trade Alert members, so you can get an idea of what you'd be receiving if you join and sign up. So these are the calendar and calendar diagonal alert trades that I send out. And so since starting with these sent out back in June of 2019 through Friday, we've had 399 trades closed out. Of those, 282 of those were winning trades, 29 break even, 88 were losing trades. Okay, so the win break even rate on this is 78%. Okay, again, unaudited. Now, of all the 5 different trade setups that I send out, these are the most we typically do a lot of these kind of trade setups. All right, so these are fantastic, really unique, flexible trade setup. And here are some examples to show you how dynamic these are. So this is one that we just did this past week. This was on Apple. We set this one up on Monday on Apple. We set this originally up as a call calendar diagonal spread first thing Monday, right here coming in. So the market had just opened up. and Apple was trading at 263.40. So this was sent out with Telegram. It says new Apple long. And it tells you exactly. I try to give you a description of why the trade is being set up, why I'm sending it out. So a brief description though, but I want to get it out as fast as I can. But here I say, okay, at that point, I was trading around 263.40. It was a daily cycle low retracement reversal. Okay, so this was a daily cycle low reversal like that, right? And with upside momentum cross, we had a momentum cross upside, which is a really confirming momentum indicator I use. And I give you the first targets, 265, 267. I say, know your risk taking this trade. And so the initial trade setup was this. So going out and buying, you'll also get a cheat sheet, which will explain these kind of trade setup, the terminology I use. So it's not, so it's not Greek to you. But here it says buy one diagonal Apple, 13th Feb. So you're going to be going long the 13th Feb option series, and then you're going to be going short the 6th Feb series against it. So this will be going long the 13th Feb, 262.5 call long, and then at the same point selling the 6th Feb 270 call against it as a spread. So I said go into it around $4.30 or $430. Right, so that was the initial entry around there, and then the next day, the third, now it was trading at 269.95. I sent out an adjustment. I said here adjustment, and then it says Apple long, tells you where you are. So if long the 13th Feb 262.5 call, short the 6th Feb 270 call spread. First I said make sure you locked in some profit, and it was currently at that time up around $216 per spread, and then adjust the balance. So what we did was we bought to close the 6th Feb 270 call, took a loss there, a small loss, but we sold to close the 13th Feb 262.5 call and took a really big profit on that because the market was now trading up around 270. All right, and then when we replaced that call, it went long, bought to open the 265 call, and sold against that the 6th Feb 275. So now we have the adjusted trade on long the 13th Feb 265 call, and now short the 6th Feb 275. All right, and the thing was really ripping to the upside. Then we did one more adjustment here on the 5th. Now it's traded at 275. So it did one more adjustment, and here it was to adjusting this up to the next level. We moved this up and bought to close the 275 short strike. We were into that short strike there, took a loss, small loss, but sold to close the 13th Feb 265 call for a big profit, and then bought to open, rolled it up to the 267.5 and sold against that the 280. And then we did one more adjustment here, same day. We adjusted this into a long call condor, which looks like this. Looks like that. So we did that. It was traded at 275. I sent out an alert to say adjust again. I said to convert to a long call condor by selling the 13th Feb 287.5 300 call credit spread, and then that gave us the long call condor, and for a reduced profit of about 75 bucks. And then yesterday, towards the latter part of the day, I sent out a trade update on it, said profit update, Apple adjusted long call condor, trade around 279. If long this adjusted call condor, the trade at that point in time was up $715 or 953% return. Right, so that's what you can be, looking at to be, taken in from these alerts. And so here was a trade set up originally, right there on the 2nd. This was right there in the morning. We kicked it off, had a nice cycle reversal. Been watching this for a while, for about a week. Then we had cycle 1 positive, 2 go positive. We had this, what I call price trigger break here, got into the trade, and then did adjustment the next day, and then another adjustment there, and then we took some profit there. We're still into the trade into next week. We'll see where that goes out next week. So that's a look there. Now here was the initial trade to show you what this looked like. This was doing the initial trade was buying that 13th Feb 262.5 call long, and then selling against it the 6th Feb 270. All right, so the call counter diagonal, the trade entry cost was $4.20 or $427. And then the trade had blown out. Now on the third, it was trading here on the third, it was traded at 270.54. So that spread now blew to 658, less our cost of 427. So it was up $231 per spread on our cost, or at risk of 427, 54% return on capital there. All right, so that's I sent out that adjustment, that alert to make sure here's where you are. Here's another adjustment I sent out, and an update I sent out here. This was sent out also on the third. And at that point, it was traded at 269.63, and had adjusted this into the 265 long, short the 275, $10 wide spread at a cost of 364. Now the spread had blown out to 650. Our cost was adjusted cost 364. So it was up 286 or 79% return. But here's where it gets really, really fun and really crazy. Here is the next adjustment. What we did was on the 5th, adjusted this into the long call condor, okay, which looks like this. And we had this $12.50 wide. We reduced our cost down to 75 bucks. So by doing the adjustments, which I sent out to the alert members, this adjusted this into next week's expiration, the 13th Feb, 267.5 call long, short the 280 call. So long this call spread here, and then added another leg, the 287 300 call credit spread here. And this created a wide spread of 1250 wide, right? Each side 1250, and reduced the cost down to 75 bucks. So the max risk on this trade now is $75. Now the potential next Friday, if this goes out next Friday, between our spreads here, between 280 and 287.5, this trade will be up $1,250, less the cost. So it'll be up $1,175. That would be over 1,566% return trade. So stellar, potential trade setups here. And this is where it went out. Here's where my alert was sent out Friday on this trade. So it says profit on the 6th. It was traded at 278.95. And you can see the trade went from our adjusted cost here of 75 bucks and blown out to 787 at that point in time when it was trading at roughly around 279. So this was up $712 per spread. On that risk of 75, that's a 949% return. All right, so that's kind of what you can be looking forward to, with these type of alerts that I send out. So that was a really nice one. Here's another one, Chevron. This one that we recently did as well, that we also adjusted. And this was sent out to all alert members. And so it says new Chevron long. It was traded at that point 157.25. Daily cycle low, retracement reversal, breaking above prior week's high. Daily positive momentum, target 160, 164. Original trade was doing a diagonal long the 23 Jan, short the 16 Jan, 157 at 165 at 250. That was on the 8th. On the 9th, we did a move up. It was now trading at 162.60. So the trade was up $226 per spread. Then we did an adjustment here I sent out on the 13th. And I said, if long the adjusted trade that we adjusted earlier too, we now were long the 160 call, short the 16 Jan 165. What we did was adjust this. We bought to close that 16 Jan 165 call, took a loss on the short call strike there, but sold to open a higher strike at 167.5, and then sold to open the 23 Jan 172 180 call spread. So we adjusted this trade into a long call condor, where now we're going to be long the 23 Jan 160 call, short that 23 Jan 167.5 call, and then short against that the 23 Jan 172 180. So a long call condor, and we were actually into this. We were able to do this for a free trade, where we had recouped all of our costs on the trade. And so then You can see here on the 23rd, sent out a profit take alert right here. Now it's trading at 167.55. Sent this out. Make sure you were taking some profit. It was currently up $700 a spread on zero risk. So these are really cool trades. This is one that we did right before the Apple trade. So here was the trade entry. Again, just my indicators. You know, this is what I based the trade on. All my indicators, my momentum, cycle reversal, momentum cycle 1 and 2. Got in here, beautiful trend up. Did a couple adjustments, and then we were into that long call condor for the end of the trade at zero risk. And so that trade was what we set up originally. So here was the initial trade, just kind of run through it. We started out long at 23 Jan, 157.5 call, short 16 Jan against it, 165. All right, so started out with that at 244 bucks at risk, and then that spread blew to 470. And so it was up $226 per spread on that risk of 240. So it was up 92% return. But then we did some more adjustments, which turned this trade into a free trade. So what we were able to do is roll everything into that option series, the 23 Jan, and adjust this into a long call condor. So now we ended up going adjusting into long the 160 call debit spread, short against it the 167, and then sold against that the 172.5, 180. And with the profit that we took by rolling the spreads up, we were able to do this with zero risk. Okay, so we got into the trade with a $2 credit. So with this trade, we had a potential, if it goes out between the two spreads, to make $752, that on zero risk. And so that's what we call the long call condor zero risk trade. And so this was beautiful trade setup as well. So these are kind of trades that I'm always trying to achieve. And so here we ended up with this long call here, based up from the original trade. So long that 23 Jan 160 call, short the 23 Jan 167.5 call. Then we added that credit spread side, bring in more premium. So short that call there, 172.5, long that, call condor, actually a credit, zero risk at a credit of $2. Goes out here, that would be max profit. Came pretty close. Went out right there, up 733% or $733 on zero risk. So that's a look there. So that was Chevron. Here's another one. These are just, we do, like I said, a lot of these, so these will be coming your way. So here's one that we did on ON, which is semiconductor stock. This was, we entered on the 5th of January. It was traded at 58.70. And I'll go through these kind of a little bit faster here, but we do a lot of these. So here says another new ON long, trading at 58.70. This was a daily volatility squeeze pattern that was in. Put the targets in, tell you why I was going to set it up. We started this out with a diagonal again, going long that 23 Jan, short the 9 Jan, and then 58.61 was the spread that we were in, $1.85 around that. So set it up around $1.85, which means, okay, you get in, maybe sometimes you get in cheaper, maybe a little bit more. And then on the 6th, it was traded at 61.40. Sent out an alert to, lock in some profit, make an adjustment. Then on the January the 7th, we did another adjustment. And then January 9th, we were, trading here with another adjustment, and then ended up right here into the 9th. We were up now, this spread was up $161 per spread, on the 9th of January. So just kind of running through the summary of this one really quick. And so got in right here. Again, look at the indicators. They're pretty much all the same that I look for the pattern. We had the cycle reversal, cycle 1 and 2 positive. We had a volatility squeeze here, a breakout, got into the trade here, got out of the trade there. So really nice, quick in and out on this trade. And so the original trade setup was doing this, the 23 Jan 59 call long, short the 16 Feb 65, so at 210. And now the trade was up, trade at 371, so blew to 371 on that spread, so it was up $161. or 76% return. That was on the 9th, and that was that. Now here's another really beautiful trade, another long call counter diagonal that we initially set up, and this was on Walmart, and this was new Walmart long, trade at 105.50, daily cycle low retracement reversal off 50-day simple moving average, positive momentum, upside momentum cross, target 1, 106, 107, target 2, know your risk. Here was an initial trade. It was to buy the diagonal 12 December long, short the 28 November, 105, 107 call spread at around $1.95. And then we had an adjustment. Here we are on the 28th. Now we were trading at 109.80. So it had a nice move up. And I say if you're long the 12 December 105 call, short that 5 December, we had an adjustment where we adjusted the original trade to the 5 December now. Make sure you took some profit and adjust balance. Okay, so here it says buy to close the 5 December 110 call. All right, so that would be the short call. Took a little loss there. Sell to close the 12 December 105 call. Took a big profit on that because we were originally long, that 105. So we had a big profit in there. Now it's trading up to 109. So sold that, brought in some big profit, and then bought to open the 12 December 107 call. So rolled a long call strike up, booking that big profit, and then sold against that the short 5 December 112 call. And then on the 5th of December, the trade was up, trading around $505 per spread on an adjusted price of zero risk. So this was another zero risk trade that we ended up in. So got in here, look at me, these are the same pattern over and over. We had a cycle reversal, start watching this. Then we had our cycle 1, 2 go positive, price trigger entry. But look at that beautiful trade up. We had a couple adjustments in here, and then that's where we were getting out on this adjusted into a long call condor zero risk trade. So initial trade was right here. We had the 12 December long 107, short the 5 December 112, $1.74. Trade blew up to 357 right there. So this trade was up 183 per spread or 105% return. And then I'm looking for these adjustments, and that's what I really try to define and spell out for you, so you can get these trades where you get zero risk or 75 at risk and a huge potential return on capital. And then we ended up here with the adjusted to a long call debit spread. So ended up going into that 12 December series, long the call here, the 110 call adjusted into, short against that, the call here, the 116. So we had a $6 wide call debit spread, and we had this on for zero risk, actually a credit of $22. So this thing had blown out to 484 plus the credit that we had now. So return of $506 per spread on zero risk. So that's another, call counter diagonal trade set up there on Walmart. Now here's the other types that we send out. These are the other category that we do a lot of these butterflies or long condors. And so here's our trade summary results here for you. So this started this part of the service back in May of 2019 through yesterday. We've had 245 trades we've closed out, 173 been winning trade, 22 break even, 50 losing. So win break even rate of 80%, really high winning break even rate. These type trades will give you 2 to 1, even up to 25 to 1 type return on your initial investment or trade. And so these are, again, unaudited results, but just to show you though what you'll be getting here with the alert service when you sign up. Here's one that we had done on Amazon, a long call butterfly spread. So this was sent out to the members, alert members. And so you can see here on the 25th, Amazon was trading 229.70. I said, new Amazon aggressive long. So this was an aggressive long, and which I base off just using the 4-hour time frame. So I try to be as descriptive as I can to all members as to why I'm doing the trade setup. And it was traded at 229.70. So I said, it's starting to reverse off the 200 SMA, breaking above the daily 50. And so 4-hour squeeze, I give you target 1, 231, 235. So we set this trade up as a butterfly. So we did the 28 November, 230 long, 235, 240 long call butterfly at around, I said, around $1.25. Then here it was on the 26th. It was trading up here at around 230.50. We had our butterfly target 235. And then here on the 28th, it was now trading at 233.22. So it's getting pretty close to our target for that trade into expiration. So set the trade up here on the 25th, and then we were getting out here, just a really short butterfly trade setup. So here's the trade analytics, what it looked like. So this was the 28 November series, long the 230 call, short the 235 call, long the 240. So that's a call butterfly, long the 230, short the 235, short the 235, long the 240. So this is a $5 wide butterfly. The trade cost was $1.21 or $121 was your cost. So if it went out here at the top of the tit, that would be max profit. This would be at $379 per spread, 313% return. So that's what your potential could be, just to give yourself an idea of what the risk reward is on the trade. And then here's where the trade went out. It was trading right here at 233.11, on the day of expiration. So the spread butterfly went from 121 to 318. So up 197 per spread, 162% return. So that's a look there on Amazon. And here's just one more example. This was on the Amazon long call condor spread that was sent out. And this was, Amazon was trading at 227.60 and sent this out. I'll just kind of go through this pretty fast. And so this was done as in long call condor. And then on the 24th of July, it was trading 230, given updates here. 25th, now it's trading at 231.86. So, said if long that adjusted 25 July 227.5, 230 call, and short now the 235.37.5 call condor, going out with max profit, close trade out between 230 and 235. So I'm giving you a description on what to do there as far as how to manage the trade into the close. And here's where it went out. All right, so got into the trade right here. And then it went to this area here. It was a really short in and out trade, 3 days. And so here was the trade setup that we adjusted into. So long the 25 July 227 230 call debit spread, and then short against the 235 237 credit spread. So I had this adjusted trade, $2.5 wide spread, cost $105, potential profit 105, 138% return. So that is what the analytics were looking like on the profile. And then it went out right there, right in the middle of the range. So pretty much, max profit there, going out right there. So it was up, went from 105, the spread cost, to 248. So up $143, 136% return on that adjusted long call condor. Now, here's another area that we do that I send out alerts to. These are very, very selective trades. And these are kind of what I call my lotto tickets. These are butterfly penny trades. And so again, very, very selective. These don't show up all the time. And so when they do pop up, these can be fantastic trades and based on super low risk. Let me go through here. Here we are. So here's one that we did on GLD, the gold ETF. All right, so this was sent out to all the alert members. And so this was on the 3rd of December. It says new long GLD long binary call butterfly. So these are binary because these are the risk, you're going to either win or lose. So the risk on this trade was going to be about $25, okay? So that's why it's binary. So very low risk. So we're going to put it $25 at risk, either lose it or make a big, huge win. So you can see here, GLD was trading here at 387.90. And I said here, trade set up to play a potential upside move to $400. There's a good probability based on the high open interest at the 19 December 400 strike for a move to the strike by Friday, the expiration date of the 19th of December. The 400 strike had over at that time 138,000 option open interest. So say, know your risk, understand the risk you're taking. And then here's a trade that I sent out. Said buy one butterfly GLD, 19 December expiration, 296, 400, 400, 404, $4 wide butterfly at 25 cents or $25. So that was the initial trade setup. And then here it was on the 19th. Now it's trading at 397.65. So I sent out an update on. I said, it was trading right there. Make sure that you took some profit on your long balance prior to the close today. Max profit at a pin today at 400 would be the max profit. It was currently up $135 per spread or 540% return. And then here it was later in the day, about 1:51 p.m. It was trading at 399.80. So now an update that the trade now is currently up $306 per spread or over 1,224% return at that point in time. All right, so this was the binary pinning butterfly that was set up here, looking for a pin to potentially 400. And this was an alert trade set up, sent out to members. So here was 396, 400, 404. Cost of the trade was 25-cent debit cost or 25 bucks. Spread width $4 wide, 400. Potential profit, if it went out right at the top of the tent, would be 375. That would be 1,500% return if that was hit. This came really close. So it went out right here at 399.74. And so at that point, it was up here at expiration, up, went from 25 bucks up to $331. So up $306 per spread. That was a 1,224% return on capital at that point in time, based on that butterfly. Here's just one more, an example, SPY. This was on a put butterfly pinning trade. Again, very cheap, low cost trade. And so sent this out to members as a pinning trade. And then, you can see here it says new SPY pinning trade at 573.80, binary put butterfly. So I said buy the butterfly here, the 565, 60, 55, so $5 wide spread. Here was on the 10th. Now it was trading at 567.63. And we were looking for a pin at 560. So it's moving down to that strike. And now it was trading here a little bit later in the day at 561. So now it's at 232 or 595% return. So this was for a pin to the downside at that 560 area. And so here's the trade setup entry. Here's the risk profile, what it was looking like set up. So this was doing a 565 put long, short the 60. That's our body that we're targeting, and then the 555 there. So we have this put butterfly targeted downside pin move at 560. Cost of this trade was 39 cents, 39 bucks. Spread risk $5 wide or 500. Potential profit $461 if you got the pin perfect, over 1,183. And pretty good. We got pretty close to it right there. So this is where it went out. Went from 39 bucks up to 456. So this was up $417 per spread. 1,069% return on that, based on that option pinning play. And then here's just one more. This one was amazing. This one pinned it to the penny. So this is one that we set up for a Tesla pin to 200. Okay, I'll just kind of flip through this. So set this one up on the 8th of February, and this was for about a little over a week out to look for a potential pin at 200. So sent this out, and so this was a beautiful trade. This was the 297.5, 200 call, 200, 202.5 call butterfly. Look at this, 12 cents was the cost, $12. Spread width 250 wide. So potential here, if we got the pin, would be $238. That'd be 1,983% return on that trade. Now we're scaling out on these trades, but here's where it went out right there going into the close. And this was on Tesla. So it went out right there to the penny. This is pretty amazing, right at 200. So it went from $12 to 250. So there's our profit of 238 on that risk of 12, 1,983% return, on that Tesla pin. And then just one more thing here. These are earning trade setups that are sent out. These are very, very selective. And here's what we've done so far since starting this back in June of 2019 through Friday. Very, very selective trades here. 152 trades we've closed out. 112 of those winners, 17 break even, 23 losers. Win break even rate of these are 85%. Again, unaudited. Here's just kind of one quick example of one that we did just recently. This was on CSX. This was a double, what I call double lightning earning spread. And so this was sent out to all alert members. If you wanted to take it, you could. And here it says new CSX earnings double calendar spread. And I go through here in the text just exactly how to do it. Very, very laid out, very descriptive on the whole trade setup, what to do, how to do it. And then here was an update the next day, the 23rd. What we did on this one, we ended up adjusting it and legging out. So what we did was we ended up legging out and converted this to a call debit spread, and we ended up with a return of over 200% on this. So these are, pretty cool trades. So set this one up here on the 22nd. This was just one recently did about a week ago, and it was traded at 36.30. Did this what we call a double calendar. We did an adjustment to convert it into a call debit spread after the earnings were released, and turned it into a really nice winning trade. Very super low risk trade. You can see the risk on this trade was $30. Okay, see it's what we call a double calendar, calendar, where we're looking to hit a call calendar or either a put calendar. The cost of the call calendar was 15 cents or 15 bucks. The put calendar was 15. So the total trade risk on this trade was $30. Okay, so that's the cool thing about it. And then with this trade, I intentionally looked at this trade to thinking it might have a break to the upside. So let's then adjust this for a long post earnings trend trade. And so we adjusted this into a call debit spread. And we had this trade set up for a total risk of 15 bucks. So we ended up long the call, 37 call, short the 38 call here, total risk of 15 bucks. And on the 26th, trade at 37.55, this was up $40 per spread on that risk of 15, 266% return. All right, so just a couple of things that you guys and gals can look for if you're interested. So, if you'd like to learn more on how to zero in on these, really great trade setups for 2026 and avoid your precious time, capital, and energy trapped inside losing trades or having to manage it, then, here's a great program for everybody here. So here, again, use that powercycletrading.com/special. I'll put that in real quick here. So put that in, you should be able to just click on that or copy it and paste it, and then make sure to put alert 20. All right, small cap, and then you'll get this for the next 6 months. You'll get my alerts for the next 6 months and the trading club for the next 6 months for a cost of $552 with a 2-pay if you're interested in that. So again, if you've been looking for more help and you need more help and guidance in trading, then this is a great package, for everybody here today to take advantage of. So 6 months to the alerts, 6 months with the trading club. And with this alert service, you'll get 5 different types of alerts that I send out. Could be butterfly or condors, could be calendars, could be monthly butterfly pins, could be breakout reversals, which are debit spreads and credit spreads, or selective earning trades. So those are the different types that you're going to be getting sent to you. And the service, if you break it down, you're talking $3.06 per day. So super great deal to tap into. My 4 decades of trading, my proprietary trading software, and the research that I use to basically cherry pick these really great trades, before everybody else sees them. So then I match the trade idea up with the highest probability option trade for the highest potential return with the lowest risk, which is I'm always looking for. And then I outline the trade setup step by step as we go through. I take you in there from the entry to the exit, any adjustments, I'm sending those out by Telegram, any updates. So, just constantly updating you on all these trades, monitoring the trades throughout the day, every day during the week. And then, so you don't have to have your eyes glued on it. So I'm doing it for you. And then if you need to take action, I'll say adjust, and you'll see it in the alert text. And then I'll send out that alert when to close position as well. So, it's just from inception to close, everything's done for you. And again, if you want to take advantage of it, go to powercycletrading.com/special. You'll get 20% off today. Use that alert 20, and you get my 5 alerts for the next 6 months, plus 6 months to my trading club for $552, and there is a 2 payment. Okay, so when I do send it out, we'll go through everything. You'll get trading guide, video updates, the trades are archived, and then you get discounts on anything on my website. So that's all they're done for you as far as the trade alerts. So it's like having your very own research department and professional trading mentor myself, but at a minuscule fraction of the cost. It comes out to just $3.06 a day. So this is going to free up your time to focus on your career or enjoy your life, and no more of you having to manually comb through thousands of charts and indexes during the day or during the week. No more confusion over what would be the best option strategy to use. No more agonizing over the best time frames. And just one more thing, a lot of members just do their own thing too. You don't have to follow my trade strategy. A lot of members just, if I go long, they just go long the calls or long puts or whatever, do their own thing. But I'll always send you an option strategy to use. So here's a nice little testimonial from Dan. He said, "You're very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I did when I was just learning how to trade the options." So a lot of members have done that. They've taken the alerts and just followed what I say, and then they do the trade and they learn from it as they go. So please feel free to share this with the other participants if you wish. And then Scott said it'll be the best investment that you'll ever make. Go with the elite package. Great group of traders in the trade club. All right, so that's everything for everybody. Again, we've had great success, continued success. So we're running from 2018 through yesterday, running a win break-even rate of 79% win rate, break-even rate on unaudited trades. Results there. That's for since inception. Here it is for the what you're going to get now. When I send out a trade, I'll always give you the suggested option trade to use based on what I think would be the best trade setup based on the option strategy for the market condition. So when it's sent out, I give you the trade entry level. I'll give you profit targets to use, and this is based on my unusual option activity, Fibonacci, moving averages, things that I look at there. I'll tell you what option series to use. I'll give you the stop loss guidelines. I'm always updating these and setting out any updates and adjustments based on that. Then all trades are listed and archived, so you can go back and review and look at the trades. So those are set up for you to archive. The day after the trade is put on, the afternoon, I'll do a trade setup video review to tell you a little bit more why I did the trade, what I'm looking for out of that trade. And then with the trading club, I send out a daily market video newsletter every day after the close. So this then reviews all the trade setups that we were looking at during the day, what the market conditions are, things like that I want all the members to understand. And then we do a weekly Q&A usually every Tuesday, live and recorded. Then you have access to the virtual trading room during the week, and this is from Wednesday through Friday, 9:30 to 10:30 Eastern. Wednesday through Friday, we do a live recorded and follow-up Q&A though every Tuesday. And then you'll get discount anything on my website, Powercycle Trading. You'll get a member's discount of 50% off on any of my indicators, software, tools, other trading courses. So a lot of great benefits for the members of the alert service, and especially now you get 6 months for this cost of about $3 a day. All right, 6 months membership to the trading club gives you access to my virtual trading room Wednesday through Friday, 9:30 to 10:30 or longer. Daily video newsletter update every day after the close, weekly Q&A live and recorded, Traders Education Vault discounts on everything. And, you're you'll get a lot out of this. It says, here's Mike, says, I joined last year after making a bad decision and trying other services. You have been the best in explaining, teaching various aspects of trading. Thanks a great deal for your expertise. And here's Vincent. He said, Trading Room Experience Daily is awesome. You cannot get anywhere in real time, nothing like it. And I appreciate this feedback very much. And so again, here's what you get. Alert 20, put in that promo code alert 20, put in that powercircletrading.com/special, and that's everything you're going to get. And go from there. Are there any questions at anything about this or anything else anybody like to go over? Yeah, in the Telegram, I'm making the trades more distinguishable. That's a good point here. So let me show you what I'm doing, which I'm starting to do, making these trade updates more distinguishable. So, for example, here is did this starting out first thing Friday morning, said new aggressive QQQ short. Then I sent out, I said update aggressive QQQ short. Then I said here, this was on Apple, profit take. Okay, profit update, Apple. All right, so I'm kind of giving more explanation here. Here was an earnings trade that we didn't get on. This was new Affirm, profit update on Apple. Here was an adjustment. So we were going to do an adjustment on Apple. I said adjustment, Apple long. Apple's trading at 275. If long, adjusted 13 Feb 267.5 call short, 13 Feb 280 call spread, adjusting to a long call condor. All right, so those are try to make them more descriptive for you. Okay. The 2Pay, you've got, there's a 2Pay if you want. Let's go back over it. What is your question, Olga? I'm trying to answer your question. Does the 3Pay equal 552? 3Pay, no. The 2Pay is going to be more expensive, right? There's not a 3Pay, there's a 2Pay. Question, are the scanners part of the indicator package available for our directional use when we subscribe? No, you won't get the scanner. I'll show you where you can get the scanner. And let me just go back here real quick to the sign up page here. Olga, you had some questions. I want to make sure it's clear to you. All right, so hold on here. So come over to your payment link here, and then you'll see everything that you're gonna, pretty much cover. Okay, come down here, click on Buy Now. Now there's a 1Pay. Okay, so if you put in for the 6 months, this gives you 6 months, all 5 of my alerts for 6 months, and 6 months of my trading club. The cost is $690, but when you use today's code, alert 20 small cap, that'll drop it down to 552, which is that's like $92 a month for my 5 alerts plus the trading club for the next 6 months. And if you do, though, there's a 3 payment. Okay, yeah, that is a 3 payment. 3 payment. My assistant did this setup for 3 payments. Yeah, so the 3 payments is going to have a finance charge. You can add it up. It's not going to be 552, but you can see what the payment would be. So you're going to be 3 payment of 205. So let's take a look. So if you do 3 payment, the total cost would be over those 3 payments would be $617. Okay, but this would be paid out over 3 installments. Okay. Now, with these alerts, you should be able to pay for the cost of your alerts just based on, the success that we've had and the profits that we're having on these trades. So hopefully you'd be able to pay for your service through the alerts that you're getting. Your return on your investment is going to be pretty strong. And then if you do want to add my indicators, this will give you my 5 steady set indicators that I use. Did that clarify that better, Olga? And then Telegram. I use Telegram. Okay, good. Yeah, so you can use your credit card. PayPal gives you payment, different payment alternatives as well. So you might want to just use PayPal. And if you go to PayPal, they have a lot of different payment setups that you can take advantage of. So, go through that. Seems to have been an error, but you can use PayPal. They've got a lot of different payment means that you can use with PayPal. All right, so that's pretty much what you get there. Any other questions here? And then I was going to show you the scanner. Yeah, here's the scanner. Let me go to powercycletrading.com, and then I'll show you where you can buy. As a member, once you sign up for the course or whatever, now you're also a member to the Trading Alert service in the Trading Club, and you'll be a member now for the next 6 months. Okay, so if you want to buy anything on my website, you're as a member for the next 6 months, you're going to get a 50% off. All right, so you can go to my website here and you can go to my trading software. And if you want my breakout scanner that I showed you, volatility scanner here, it shows you, tells you how it works, everything available, Thinkorswim. So you can come down here and then you can come down once you get your members code. This is on my website, $397, but you put in your members code and you're going to get this at a discount of 50% off. Okay, so that's the key. So you can get my scanner, you can get all my indicators or whatever that I'm using at a discount of 50% off with your members code. So this is cut in half to 198, and then you can get anything else I have on my website, all my other indicators, my directional trading indicators here. You can get those. Now, if you want these indicators, though, this is a great deal. So add to your cart for $195, you can get my directional trading indicators. So this is a 5 steady set indicators that I use. And, it's got all the tools that you're going to need. It's got a momentum cycle 1 and 2, a reversal indicator. So if you want, you can get those, add those to your cart, come into the trade room. We use these indicators for every trade that we do. All right, so that's a look there. And then if you want any of my trading courses, my momentum flow indicator, opening range breakout indicator, momentum flow trigger indicator, stock reversal, extreme range bands. Here's the whole suite with all the course material. Got a lot of different things, and then courses. I've got all the trading courses here. So get started trading options. You get 50% off any of these. Option trading playbook, directional option trades for reversing markets, stock portfolio hedging tactics, positioning for 26 using synthetic covered call strategy, breakout with weekly options and futures, inside secret technical trading. So, selling option tactics course here, calendar course, just completed this, earnings course, just completed this, butterfly course. So you can get all these indicators, all the courses, everything I do, Fibonacci course at a discount of 50% off if you use that promo code. All right, so just a lot of great benefits for everybody here. Yeah, so question, can you choose the 6-month time period so you can get the trading system ready? Yeah, you can stop and start, right? So if you, let's say you sign up today, you don't have to start your service today. You can start it tomorrow. You can start it next week. You can start it a month from now, whenever. And then if you, for the next 6 months, if let's say you want to stop, take a breather, and you want to take a break or something, put it on hold. You can do it manually, and then when you come back, you'll still have the time left. So you might take off for a month, and then you come back, you'll still have that time left. So then you can, do that adjustment for you, as far as what works for you. Okay, so what? I'm not sure I understand your question, Josephina. Let me see. You would like to go right back in the members alert this Monday. Okay. So yeah, just use. You should be able. Oh, you're on pause. Then just you should be able to go back in and start the service back. If you have any, um, if you need any help, then just send us an email at support@PowerCycle Trading. So just if you need some help getting back in, just send us an email there. Yeah. Okay. So question, can you talk more about the coaching room? Okay. So during the week, we start the first session. We start Tuesday at 11 Eastern. I'll do a live and recorded Q&A Tuesdays. So typically Mondays are kind of a washout day a lot of times. So I will do the we'll start with the Q&A Tuesday live and recorded, and then we start the trade room opens up Wednesday morning from 8:30 Central to 9:30 or 10, depend, or longer sometimes, depending on what the market's doing. So in the trade room, then I'm going over the trades that that I'm looking at. I'm doing these kind of scans and all that kind of stuff, looking for trades. And so in the room, then I'll point out certain trades that I think are starting to set up. We'll go through the watch list of those trades. And then sometimes the trade is ready to execute. So we'll go ahead and we'll just go ahead and start putting the trade on right there in the trade room. And now the other thing too that's great in the trading room is that also that any member, anybody in the trade room, if you've got a trade or anything that you have on that you need help with, I'm there to, help you out on your trade. I mean, I've been doing this for a long time, so there's a lot of, good information, a lot of good mentoring that I can do for you to help you with your trades, and all the different things that I send out and talk about are going to be based on my trading indicators. And so we go through using these indicators, how to analyze your directional trades, using the indicators, what option strategy to use, how the option strategy works. So there's just a whole lot that goes on in the trading room. So come on in, and then again, it's for members come in, and if you have any questions on a trade, come on in and ask questions, or I'll show you trades that I'm looking to set up. So for example, on Friday we were looking at one trade. Wanted to put this on. We had one member had a trade on Wells Fargo, and he just kind of wanted to review the trade. So he did a long call counter diagonal on Wells Fargo, which looks really good. So this is a really nice trade setup that was done, and just a lot of different things there. And then we went short first thing in the morning on QQQ, just kind of a intraday short, and then ended up getting out before the market took off, and just talking about the market, different strategies, what we're looking at for that day. So constantly looking for the swing trade type opportunities, right? And that's where the trading room comes in to help all the members, with their trade setups that they're looking at or good setups that I'm looking at. All right. Okay, any other questions here? So for next week, we've got non-farm payroll Wednesday, so we'll be watching that. I do like the looks of Charles Schwab. What's the average time of the trade? Typically a week or less. These trades are swing trades, okay? So if you just look back at a few of the trades here, typically a week or less, So what I like to do is typically set up trades on a Thursday going in for the next week, or a lot of times, maybe sometimes on Monday. So typically the average trade duration is maybe 5 to 7 days. So if you look back here, just at a few, I'd say 5 to 7 days. We're currently still into the Apple trade. So that one is trying to stick with this one longer. So we've got this Apple trade that we're still in. And we set the Apple trade up on the 2nd of September. And so we've been into this Apple trade for 5 days. Okay. And if we get to move it into next week, then, we'll be into this trade for almost 2 weeks. So that would be fairly long. So that's kind of the typical trade duration. And so now we've got this Apple call Condor on here. All right, so we're still long here. So potential for, over $1,000 on that risk reduced down to 75. Okay. That's correct. Yeah, the question, alert service will not break the option day trading rules. Right. We will do, maybe one adjustment. So it's not going to break the rules. You went in, it didn't work. What, the payment link didn't work there, Gene? So buy now. Put in your promo code alert20. Now it dropped the price, right? Then what were you doing? So, and then pay with credit card. Can you try again? It didn't break, it didn't knock the price down to 552. Make sure you use alert 20 small cap, okay? And then did it discount, or you're not able to pay with credit card? Then go in your credit card. Yeah, can you try again? You should be able to copy and paste the trades in. I sent them out that way. Should be able to. Let's see here. So Gene, yeah, okay, so you came down here, click buy now, and then Anybody else having any problems with the payment link? Let me do this one more time here. And PowerCycle Trading /special. Okay, alert, ALERT 20, small cap. Okay, so question is, you're not getting this discounted price? Well, now it should discount down to 552. And I'll send an email to my assistant to help walk you through it, Gene, if you're still having problems. Anybody else have any problems at all with the payment link? All right. All right. Okay, any last questions? I'll double check there with my assistant, Gene. Anybody else have any problems on the payment link other than, hopefully, Gene, you got it working? Recommended account size, I mean, it can vary. I mean, these trades are super low risk. I mean, if you look at the cost of the trade here, this one we did last week on Apple, you did one contract, the cost of the trade was $400, $500. So you can kind of do the math, and figure out your account size, depending on how many contracts you want to do. For example, like Apple, the initial trade setup cost, about, let's say $400, $500. But a lot of these trades are even cheaper than that. I mean, these are calendar diagonals, but the butterfly trades can be as little as, $25 a spread or $100 a spread. So you can set them up with a really low capital account. Yeah, you can't do it on the website. You have to do it on this payment link. I'm sorry. Yeah, that's the problem. You can't do it on the website. This is only good for today with the link I showed you. You cannot use the website. All right, so that's the problem. So go into PowerCycle, get your browser, or just click on that browser, and you have to. This will not give you this on the website. Okay, so this is not available on the website. There's not a 6 months at this discount. So go click on that link I gave you, or just put in PowerCycleTrading.com/special. And you have to use this link here. Okay, so that's the problem. Yeah, so most brokerage accounts are going to require 2 to 2,500, 3,000. So that's basically what you're looking at, like for any account size. But I mean, the trade costs on these trades are a lot less than your account size that you need. So yeah, it might be $2,000 to $3,000, depending on their broker to open up an account. And then the trade cost, though, is, these trades are very low risk, super cheap trades that I typically set up. Yeah, so then use that, and that should get you there. So for example, here's Apple, like for example, here's a butterfly trade. Here was the butterfly trade we did on Amazon. Cost of the trade was $121 debit cost. So if you did one contract, $121, did 10, 15, 20, 30, however many you want. But yeah, so they're not high costing, high at risk kind of trade setups. Here was just an example of the Condor, $105 in spread. All right. Well, any other final questions? If not, we'll call it a day. And again, I'd like to say thanks everybody so much for being here, and I'll see a bunch of you back here next week or at the next course that I do. So thanks everybody. If no remaining questions, we'll call it a day. Have a great rest of your day and weekend. Ciao, everybody.